Have you ever seen the price suddenly jump and leave behind a huge candle with no clear reason why? Then you're just staring at the chart, unsure if you should enter, exit, or just walk away. You're not alone. In fact, this is where most traders get confused or worse, get trapped. What you're seeing is called a liquidity void or a market imbalance. They can be identified as large, long candles on the charts. So what causes them? Big news, central bank moves, geopolitical shifts. When those hit, price skips over zones where buyers and sellers normally interact, leaving behind a gap. That gap? It's called a liquidity void. As I said, most traders either ignore these zones entirely or try to trade them without understanding what they really mean. But what if you could actually turn them into profitable trade setups? That's why the Smart Liquidity Void indicator was developed. Once you add it to your chart, it automatically detects and draws liquidity voids clear and beautifully. In the settings, you can adjust how many candles the indicator analyzes, and it also calculates smart stop loss and take profit levels using ATR. But here's the real deal. It doesn't just draw the void, it actually predicts what's likely to happen after price returns, reversal or a trend continuation. And that opens up multiple ways to trade it. Let's start with the simplest way. You wait for a signal to be printed on the chart, wait for the candle to close, then enter your trade using the recommended stop loss and take profit automatically provided by the indicator. No confusion, just clear setups, easy for beginners. In fact, the market imbalances or liquidity voids act like a price magnet. Price tends to return to fill these gaps, creating high probability setups. If you want more certainty, let's move to the second strategy, a more advanced approach. To boost your confidence, you can combine this indicator in conjunction with others. In this example, I'm using a 200-period moving average as a baseline, and a relative strength index, or RSI, is specifically watching the 50 level. And here's how the strategy works for a short trade. Wait for the candle to close and the sell arrow to be printed. Next, on the RSI indicator, check that it is below 50, signaling bearish momentum. Make sure we're in a downtrend based on the 200 MA. Simply enter your trade using the stop loss and take profit levels provided by the indicator. Of course, not every trade will be a winner. That's the nature of trading. However, by following this simple rule of a 1 to 2 risk to reward, you give your account a solid chance to grow consistently over time. To better understand how this powerful indicator works, let's explore another strategy. This one works inside the liquidity voids identified by the indicator, which often act like magnets. Let's take a look at a real example on the AUD/USD 5-minute chart. A large bullish candle creates a liquidity void. Price returns to fill that void, then gets rejected. Here's the setup. Identify recent tops and bottoms for your stop loss and take profit levels. Notice how the RSI bounces off the 50 line, confirming the reaction. At that point, you can enter a long trade, placing your stop loss just below the recent low and aiming for the green take profit line drawn by the indicator. This gives you a wider stop, but a much safer entry, aligning with smart money flow and trend direction. So, in this case, it would be 101 points or 10 pips, and there's a potential target of 185 points or 18.5 pips. Prefer a tighter stop? Place it just below the void zone for a higher risk to reward ratio and lower exposure. This same setup also works well on lower time frames, like the 1-minute chart for scalping. Here's another setup. Price fills a red void, prints a buy arrow, and shifts from bearish to bullish. You could enter at the arrow with 1 to 2 risk to reward, according to the first strategy. Or take it a step further. Price forms a double bottom inside the void, with bullish divergence on RSI. That's a high probability entry. In this case, 52-point stop loss and 104-point take target. It's a clean 1 to 2 risk to reward. So, to quickly recap, Strategy 1 is simple and great for beginners. Strategy 2 goes deeper, ideal for experienced traders watching price behavior inside the voids. Right now, I'm currently up 174 points or 17 pips with a 1 to 4 risk to reward ratio. Interested? You can try the Smart Liquidity Void indicator on TradingView by clicking the link in our description. Or head over to Indicator Vault's website to learn more and grab your copy today. Thanks for watching. Don't forget to like, subscribe, and hit the bell so you never miss a trading tip. Happy trading!